How's everybody doing? Hope you're having a blessed day. So today's video is going to be geared towards self-employed individuals, whether you own an S corp, a C corp, a LLC, whatever it is. You're self-employed and you're looking to buy a home. This video is for you. It's geared towards specifically you. And I'm making this video because, quite frankly, self-employed individuals, we'll just say they get the short end of the stick sometimes when it comes to home ownership. When it comes to applying for a mortgage, it's not as easy as it would be for someone who's employed, W-2, and works a 9 to 5. Whether you're, whatever your position is. There's a huge difference between, let's say, a lawyer who works at a firm and the firm pays them an annual salary and they get them a W-2 versus a lawyer who owns his own practice and has his own firm. Those two applications are going to be completely different. Just an example, if you're self-employed, it's going to be tougher. So a few tips that I'm going to give in this video just to kind of prepare you to make things a little bit less stressful and get your approval rates a little higher. It's going to be pretty basic stuff. Before I start, this isn't for just conventional loans or just FHA loans. This goes across the board for conforming loans, and for non-conforming loans. We're talking, if you've seen my previous videos, I would hope you know the difference now between a conforming loan and a non-conforming loan. Again, just to reiterate, a conforming loan is a loan that conforms to the guidelines of Fannie Mae and Freddie Mac. It conforms to those guidelines. A non-conforming loan or a non-qualified mortgage are different loans that don't conform to those guidelines of Fannie Mac and Freddie Mae. Fannie Mac and Fannie Mae. And so this is across the board, whether you're getting an FHA loan, conventional loan, or a non-QM loan, which is your bank statement loans that you probably hear about, your profit and loss statement loans that you're probably hearing about, just those unique different ways of getting qualified. So when you're self-employed, first thing right off the bat, you want to have a killer credit score. Your credit score has got to be pretty good because you're already taking a pricing hit just for being self-employed. When you're applying for a mortgage, there's something called loan level pricing adjustments, LLPAs, loan level pricing adjustments. Lenders know this on their side, but you as a buyer, you should know this. You don't have to be an expert, but I'm just giving you an idea of what's going on when they're giving you an interest rate. Once they run that file through, there's a difference in interest rate. Not a huge difference, but there is a difference in the interest rate that a self-employed person gets versus an employed individual. Loan looks a little bit more riskier, so the interest rate increases a little. There's a loan level pricing adjustment. Same thing if you were going to buy like a condo, let's say. It's different. There's a loan level pricing adjustment if you are purchasing a condo versus a single family home. So there's loan level pricing adjustments when you're self-employed. So you want to kind of make up for that by having a killer credit score. Now, of course, the higher, the better. So if you're self-employed, really focus on getting that credit score. You don't want to be in the 600s. I don't care what anybody says. You can still get approved in the 600s, 660, 680, but bump that. You want to go as high as you can. You want to go, and this is also for employed people, just in general. You want to be as high as you can on that credit score. If you need help with that, man, there's basic things that you can do just to increase it by a few points. If you have inquiries that you didn't actually take a loan out for, if you were just kind of shopping for something, even shopping for a mortgage, and you went and got your credit pulled by multiple lenders, if you didn't, and you obviously you're just going to use one lender at the end, call the credit bureaus and get those other inquiries off. That'll easily boost your credit. So if you need a little bit more help on where to get an accurate credit score, let the Credit Karma stuff go. Experian, that's pretty decent, but it's a little bit difficult when you try to get something off your credit report and Experian isn't cooperating. You really can't sue because you're a part of their there's like a disclaimer in the bottom that specifically says you can't sue us because you're registered with us. So I would register for something like Identity IQ. Place you can get, it's like $100 a month, but it's worth it. If you're self-employed, it's definitely worth it. You get to monitor everything that's going on in your credit report. Point blank, period, have stellar credit. Always want stellar credit. And whenever you get business funding, because you're self-employed, you're gonna want a stellar credit if you're PGing it, if you're being a personal grantor to that. So that's number one, have stellar credit, right? If you don't have stellar credit, but you're in a position where you still need to buy it anyway, that's fine. You just put up with it. But these are tips to make the process go a lot smoother. Have stellar credit. If you're using a non-QM loan or a QM loan, which is a qualified mortgage, conforming or non-conforming, they're going to determine your income in a different way. Regardless, you're still going to need a reliable CPA. Make sure your CPA is on board with knowing that you're purchasing a home. They're on board with understanding the time sensitivity of your home purchase, because your lender's going to need a few things from them. Your lender's going to need, especially if you're using funds from your business account to purchase the home, because all funds need to be sourced. So if you're for example, if your business bank account, right, you have HP Enterprises is your business, and HP Enterprises has a bank account, and that bank account shows all the transactions of your business. That's where you get paid, and you really don't, you have a personal checking, but you don't really transfer cash over. Just an example. And you have in that checking account, let's say 300 grand. Of that 300,000, you're gonna put as a down payment for your new purchase. So you're using funds for this transaction. The mortgage underwriter is gonna wanna see or have at least a letter from a CPA, a certified tax preparer, whoever does your taxes. They're gonna want a comfort letter, right? Something that's gonna say like, yo, how do we know if he uses the funds from his business account to purchase his personal home where he's going to live? How do we know that's not going to negatively impact his business? So your tax preparer has to be prepared to write a quick letter. Hey, to whom it may concern, using the funds out of Ernesto's HP Enterprises business account ending in XYZ is not going to negatively impact his ability to run the business. It's not going to negatively impact the business. Should you have any questions, contact me, right? It has their CPA license, all that good stuff. There's going to be, that's just an example. There's going to be a few other things that they'll need from your CPA, like just confirming the percentage of ownership, confirming the business is still active. These are things they can get on the Secretary of State, but they still want, again, comfort letters, which they can get from your CPA. So your CPA's got to be on board. That's going to help you guys out a lot. You're already getting the short end of the stick for being self-employed, so this is going to make the process a lot better, a lot easier, so to speak. CPA's got to be on board. You got to get your CPA in the call and say, hey, look, I'm going to be in the middle of buying a purchase of my property, a new property, or whatever the case is, and I'm going to need your help. My lender told me that at some point they're going to be contacting you for some letters. I just want to make sure that you're going to get to them quick, because some CPAs, in most cases, some people have really good relationships with their CPAs, and their CPA is on board. I've been in those situations where the CPA is like, hey, you let me know whenever you need those letters and I got you. And they send it immediately. Other CPAs run a huge enterprise and it takes them a while to get those letters to us. So, I mean, I've seen it take like 3-4 weeks. The underwriter wants a profit and loss statement, a year-to-date profit and loss statement, and that CPA is taking, you need a rate lock extension, you need a contract extension, everything, just because everyone's waiting on the CPA. So one thing you want to do is let your CPA know what's going on. And if you feel like you don't have a really good relationship with your CPA where you can just call them and ask them this type of stuff, I would encourage you to search for a CPA that you can have a decent relationship with, right? And ask your other self-employed buddies who's their CPA, or ask their loan officer who's also a self-employed person, who's your CPA, or what other clients do you have that are self-employed that you've worked with their CPA, and their CPAs are easy to work with and they know their stuff. So one thing you want to do is that. It's huge important. So credit score, and make sure your CPA understands the mission. You want to make sure they understand the mission. What other things can a self-employed person do to improve their chances of approval? Is have some reserves. This isn't required on every loan, but it's healthy when an underwriter sees that you have reserves. If you're scratching your head wondering what reserves are extra cash after you close. You want to keep at least 6 months. It's not required. Well, some loans might require you to have 12 months of reserves, depending on that loan. But whatever that requirement is, just make sure you have it. But before you go in, you want to at least make sure, hey, how much am I going to spend? And can I just show the underwriter that I have at least 6 months of reserves? And reserves don't have to be in your bank account. If you have a trading account where like you have like a 401k or whatever the case is, if you have like one of those TD Ameritrade accounts where you've allocated a ton of cash that you don't touch, you can use that as reserves as well. You just have to prove that you own that account. But you just show them like you're not going to be on your last dollar, or at least just have 2 months of reserves or something like that after you close. Now again, if you're doing like a conventional loan or something like that, you probably won't need it, but it's always better to show it. It keeps underwriters like a little at ease. This guy's got it going on. Yeah, he's self-employed, but you know, he's crushing it. He's still got 6 months reserves. If anything happens, boom, you're pretty good. So you want your credit to be superb. You want your CPA to be on board. You want to really have a good relationship with your CPA. And you want to have some reserves. You don't want to look like you're on your last dollar on the purchase, whether you're getting gift funds or not, which gift funds are allowed, gift funds. But you still want to show after all is said and done, down payment, closing costs, you can show them at least 6 months of reserves. I think that pretty much tackles it. So this video, yeah, as I mentioned, it's geared towards your self-employed people. Us self-employed individuals, man, we kind of do get the short end of the stick. So if you have these things in line, it'll help increase the chances of a smooth transaction, and it won't be as stressful as it typically is for a self-employed person. Just the pre-approval process might be a little stressful if you're going in for, let's say, a 5% down conventional loan, but your taxes don't show suffice income. That's typically the biggest hurdle for us self-employed people to overcome when we're even buying our very first property. We'll do our taxes right. We've been self-employed, business has been booming, and you go in to do a 5% down on a conventional loan or a 3% down on a conventional loan, and you can't. That's why non-QM loans exist, because when we file our taxes and our CPA writes off the vehicle for our business that we purchased, the CPA writes off the meals and entertainment, the CPA writes off just everything that you purchased with your business card or through your business checking. They write those things off on your taxes, and to them it's a good idea because it's what they should do so that you don't owe Uncle Sam an arm and a leg. Well, when those taxes go into the mortgage underwriter and they're trying to see what you can qualify for, those write-offs get deducted from your income as well. If you made 500 grand but have 500,000 in write-offs, guess what? It looks like you made $0 according to your taxes, because your taxes are a financial instrument, and that's what they're going to use to determine for a conforming loan your income. And so right off the bat, you can't get a qualified mortgage, a conforming loan with 3 to 5% down. You're already out of that category. So it is a little bit tougher for self-employed people to get into their very first home, or their second home, or their third home. So implement these strategies. Have stellar credit, because especially if you're using a non-QM loan, you're going to need some pretty good credit. Make sure your CPA is on board with supplying things that your lender needs, and make sure to have some reserves. Make sure to show you have some savings. Again, your savings don't have to be in your checking or your savings account. It could be like a trading account, a 401k account, a CD, whatever the case is. Just show that you're not on your last dollar when you're applying for these mortgages after your down payment and closing costs. And so I hope you guys find this information of value. As you know, it's the Mortgage King, so you know who said it. God bless. Take care.